Okay. All right. We are online.
Sorry, they do have food parts of their business, I should say, but Primark is the part that we know best. And thank you very much, Tiago Alfaro, our breaking news editor with the London Rush. You'll find more on these stories on the London Rush on Bloomberg.com and, of course, on the terminal as well. Coming up in the next part of the programme, we're going to be discussing more, of course, of what we should expect from the Bank of England later today. We're going to have Charles White Thompson, CEO of Saxo Capital Markets, with us as well. Always a great person to listen to on a day like
Okay, perfect. So, those that are just joining us, welcome. It's been a while, but we are back. What a wild week it has been so far. Fantastic. Obviously, we pulled in a couple of huge trades on gold, as it has been moving quite heavily, and managed to capitalize on the oil trade as well. So, yeah, yesterday and the day before we closed out the channel early, just because obviously we managed to capitalize on huge moves. So, it was pointless on continuing. So yeah, let's see what we can get today. Currently in a long here on oil. Okay, setting some nice structure. Came down, tap for liquidity, and holding structure. So as long as it can continue holding the structure here on the lower time frame, we should see a continuation back up. We got a break of structure briefly back in to liquidity, as you can see, 15-minute demand and holding. There's more demand lower down, so hence why we've just set the stop loss nice and tight. If it does break and come down for that liquidity lower down, then yeah, we'll look for an entry lower down. As this stops, 2 seconds. Oh, okay, yeah, it's working. But yeah, welcome back. Let's see what we can get, guys. Let's see. Bitcoin, huge moves. Broke out heavy. So there's a few pointers to actually touch here on Bitcoin. So I will go over them. We're at daily supply, nice tap. That's a previous high. Okay. So we're currently holding, not seeing too much supply. So we'll see whether we can break and push up a little bit higher. Now there is more supply just above the very top end, 325 ish. From all the way back here, right? This is this top here. That's what we're looking at holding. Okay, so I wouldn't be going too crazy right now. Still very low volume. Yeah. I'm not entirely buying it, so we'll see how things kind of play out. But 4 hour, obviously we're getting a bit more volume coming in, but I mean your higher time frame is still very low volume. So yeah, if you're fully bullish on this, just do be careful. Yeah, we'll see whether we can get in on something. We are looking at it pushing a little bit higher, above that previous high. Hopefully we then can get some nice supply coming in and actually turning this right back around. But again, we'll see. We'll just go with price action. We're not doing anything too crazy. But yeah, Bitcoin dominance obviously is broken through its range from 2 years. Okay, which is obviously a huge factor to take into account. Okay, topped out at 52%, which is huge. Seeing a little bit of a pullback, so yeah, the altcoins are going to start to continue to move. Okay, just below that 200 weekly, but yeah, we've broken out, which is the main point to take. Okay, and you're going to see some of these altcoins really start to push up as Bitcoin kind of ranges, builds up on some structure. Okay, ready for another push up higher. So as long as this pulls back and Bitcoin continues to kind of hold its structure and move, upwards. Yeah, some of these altcoins are really going to start moving. You're starting to see quite big numbers. But yeah, liquidity is all the way down here. So I mean, we'll see whether it does make that pullback and tap for liquidity down here. It held this area here, as you can see. So we'll see whether we can get down beneath, move towards a little bit just above as well, so you can actually widen that really. But yeah, if you're in, you're in. If you're not, you gotta be patient. So we'll see. Let me go over to gold, okay, because gold has been on a bit of a wild one, okay. I'll show you those that obviously aren't with us. What we managed to capitalize on. So that was yesterday. So huge trade, as you can see here, very nice structure. Okay, came back up, tapped straight back down. That was 1500 pips. Our target was actually a little bit lower. It did manage to come down a little bit lower, but obviously we got out a little bit before, capitalizing on the majority of the move, which was the most important. Obviously added a few units on there, and then yesterday we managed to capitalize again on the continuation back down. Again, it did push down a little bit lower, and now it's actually rebounded again, huge. And then we managed to capitalize on nearly 100 pips on oil, as you can see. So yeah, well done to everyone that got involved in that, because the last 2 days have completely made this month. Lots of nice setups, lots of nice opportunities to capitalize on. But so structure in terms of gold. Okay, so 4-hour demand, we came down and tapped it. Okay, as you can see here, just beneath. Saw a little bit of demand coming in. Okay, which is nice. So what we are looking for essentially is some bullish structure to start to build up on the lower time frame. Okay. So this 15-minute area to hold ideally, and then start to make a push up higher. So we can be looking at this liquidity area just above here, about 1938, to test it, and then after that we can be pushing all the way up here. There's a little bit here as well. But yeah, you're much larger supply is at the top of that range that it was holding. So there's a lot of supply to get through on the top end. So this is going to take a little bit of time, but yeah, we'll see. Get rid of that.
Subscribe to Bloomberg Daybreak Europe Edition today on Apple, Spotify, and everywhere you get your podcasts.
Yeah, let's see whether we can get a rebound. It's not looking too bad. It's not looking too bad. I like this. It's not looking too bad at all.
Placing bids and offers online to execute their trades. Learn more at ibkr.com/bonds.
What I know about courage, I learned from my adoptive mom. She said sometimes you just gotta hold on and know we'll get through this. Mom, we are so high up.
Yeah, hopefully we can get something. Let me go over to the FX side.
Learn about adopting a teen from foster care. You can't imagine the reward. Visit adoptuskids.org to find out more. This message is brought to you by Adopt Kids, the U.S. Department of
Okay, so
and the Ad Council.
last night, as standard, we sent in obviously some TA on some charts. So let me just go over to it. Yeah, New Zealand dollar, US dollar, in case we were looking at pullback to 15-minute demand. So building some positive structure and pushing back up towards the 4-hour supply. So we're kind of getting that here. I'm just testing this little bit of supply here, pulling back. Very similar structure to oil, right? On the lower time frame. Okay, so come down, building that structure, holding, and then moving back up. So it looks like we might be able to get an entry, potentially. This is nice. This is nice. This is nice. Might be able to get in on something. It's a bit of a wide.
Sounds good, honey. Check today at nhtsa.gov/the-right-seat. Brought to you by the National Highway Traffic Safety Administration and the Ad Council. The best of Bloomberg Business Week every business day.
Yeah, we've just got to be a little bit careful here as well.
Carol Massar and Tim Stavak.
What does an Apple-developed car look like?
The day's breaking global business, finance, and tech news, along with smart analysis.
This stock has been on a tear.
The Bloomberg Business Week podcast.
Can we just get like 20 seconds from you on Bitcoin?
Subscribe today on Apple, Spotify,
I would like
wherever you get your podcasts.
things to come down here, test for this, and then move.
Markets, headlines, and breaking news 24 hours
So,
a day. Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
that would be nice if we could get that.
It's 8:40 here in London. I'm Stephen Carroll. Let's check on where markets are
Be
moving.
very nice.
Slumping.
DXY.
Central bank decisions. We've already had the S&P decision this morning, hiking.
It's definitely on the way down. It's coming up to demand. Okay, so it's holding this bottom, but it's going to be moving down lower, more than likely.
600 is down 1.5% at the moment. FTSE 100 1.2%.
Yeah.
Nowhere the CAC 40 in Paris 1.5% in the red, and the DAX in Frankfurt down.
That's where you're looking at holding.
In terms of the sectors that are moving this morning, banks the worst performing, down 2.4%. Auto and parts shares down by 2%. Industrial goods and services 1.5%.
Test it.
Lower as well.
Yeah, that's where we're looking at holding, ideally finding some demand. Okay, down here, and then start to push back up. It's a decent amount, especially from here, that test holding. So, yeah, a little bit more downside. A little bit more downside. We were actually looking at. Just have a little look. Well, yeah, New Zealand dollar, US dollar to come down. What else did we have? Yeah, so Canadian dollar, Swiss franc is compressing.
Yesterday, the pound is 0.2% weaker. That's the dollar 127.51. The euro is a touch stronger at 109.89. The Bloomberg dollar spot index is also a little bit stronger this morning too. And we're continuing to watch Bitcoin as we've seen that gain in the crypto
Might break through. Looking at it coming down, coming up to that daily supply area.
Token 30,031. In fact, up by
It's not going to be an insane move, but still the nice, relatively nice setup.
Good morning. The US Federal Trade Commission has sued Amazon.com for violating consumer protection laws. The regulator is arguing the e-commerce giant duped consumers into signing up for its Prime membership service and deliberately made it hard to cancel. It's the third suit the FTC has filed against Amazon in the past month. Amazon responded saying the FTC's claims are false on both the facts and the law. Saying in the US, prosecutors are looking into former President Donald Trump.
Nice buy side coming in. All right, let's take it. It's a bit aggressive, so I'm not going to go too wild in terms of margin, but let's see what we can get. Ideally, would have wanted it to come and test that 15-minute demand area, but we are getting buyers just beneath this area.
The French minister is speaking at a
do.
overhauling the global lending architecture. The new Global Finance Impact aims to reform how multilateral institutions support poor nations and address threats like climate change and future pandemics. Attendees include Chinese Premier Li Qiang, who told Macron last night he looks forward to discussing ways to expand trade. And a brief look at the market today, it's all BOE, but you also have Swiss rate decisions, Norges Bank and Turkey.
Yep.
Our top stories this morning. Britain's red hot inflation print yesterday puts the Bank of England in an excruciating position today. Our next guest says that the bank should be raising interest rates today by 50 basis points and does expect peak rates to reach 6%. Joining us now is Charles White Thompson, who is CEO of Saxo UK. Welcome to the radio studio. Thank you so much for your time. You talk about the UK being in an economic danger zone. What does that mean to you, Charlie?
Yeah, good morning. I think we should start with the inflation print yesterday. So if we look at that, I find it very difficult to find really anything that would encourage me. I think that, for the sake of a better mood, maybe we could target fuel for cars. There was some relief there, but everything else, everything to do with the consumer, shows
Morning.
price appreciation. And I think it's worth looking at.
Right, what's oil doing?
Up 18% year on year, and that was down small from 19%. But within that, the relief came from the price of eggs.
It's holding that area, so it's nice. Let's see whether we can get that move and continuation back up. As mentioned yesterday, we capitalised on this beautiful move. Break of structure, just appear, straight back down, tap for demand, tap for that liquidity. See whether we can make that push up higher.
Has all sorts of issues, and when you look at for example, the 2-year mortgage is at 6.8%.
Okay. Yeah, we do need to be careful with that. As mentioned, we're going in with less margin on this, just because still could be coming down to that 15-minute demand zone tapping. If that's the case, then we'll just re-enter down here and capitalise on a larger move. And we'll actually go in with full margin if we can get that entry down there.
What then? Looking for a 50 basis points.
Let me have a little look at.
What about the lagging effects, though, of hikes we've had already? There's a lot of talk about how the fixed rate mortgage system in the UK means that the pain is being quite delayed from earlier hikes.
Yeah, I think there is lag.
A little bit of a bounce.
And therefore,
Little bit. Volume's starting to pick up a little bit as well.
And what you don't want it to do is go on its gap. And it is gathering momentum now. And therefore, what I think we
Thank you for the likes on the streams, by the way, very much appreciated. Obviously, those that are joining us, the next live stream on the for the New York session, it won't be on TradingView. So if you just join us through TradingView, you won't get access to it. It won't be made private. It will be made public, just because we haven't been able to go live recently. So we'll make today's live streams and tomorrow's live streams all public to everyone. But again, as mentioned, it won't be on TradingView. So please do bear that in mind if you wish to join us again a bit later on.
Because what's happened is that we've been behind the curve. So if you look at this, we had rock bottom interest rates between 20 and 21. 2021 was the problem. If you then look
what else? Let's have a little look through.
And we're talking policy failure here. And then if you think about the move between very close to 0 and 1%, it took 4 goes. And in my opinion, we should have moved harder and faster then. And then I think we would be in a better position now. So now we're in this difficult position whereby we are at 4.5% base rates. We're at inflation at 8.7%, and we have to go again. So I think the Bank of England, particularly with Tenreiro and Dingra on it, I think that you'll probably see a 25 basis points, but I would want to be more robust.
You sound frustrated, and I wonder whether why is that the Bank of England, there should have been less groupthink. I mean, earlier intervention, that has been the criticism all along. Is it that Andrew Bailey is the wrong person in charge? Is some of the blame also for government and fiscal largesse during the pandemic?
I mean, it's not for me to talk about the chairman of or the governor of the Bank of England. But I think that what we have is that you raise a very
Yeah, we do
interesting question.
need this to hold. Yeah.
The question you raise is that how did we get here? And I think we got here because QE went on too long, rates were too low, we had an over-accommodative central bank, and that's not just the Bank of England, it's around the world. And that's why I'm a believer that I would like to have a more traditional central bank, a less reactive central bank. And that doesn't mean to say that there isn't a safety net for the most vulnerable, but I just don't think that we can have a monetary policy that always rides to the rescue on everything, because otherwise what happens is you get these massive asset bubbles, and there are consequences. You know, people are not talking about the fiscal gap now. The fiscal gap is, if you roll the clock forward 10 years, we have an aging population and we have a shrinking workforce. So therefore, how do you get that benefits? You have the taxpayers are going down and the benefits are going up. So we need to discuss the fiscal gap. We need to have this review so that we can also acknowledge the wins. And there was a very difficult period. I mean, COVID and all of these...
This doesn't look too bad either.
So we should acknowledge the things that were done well. But we should also call out those things that were done less well. So
especially with the news that you're expecting today.
Is that we need to have a
just get rid of all this previous stuff.
The value for this country. Because in the absence of that, we sell out the next generation, and that is not what we should do.
Okay, this is something that we have spent a lot of time at Bloomberg talking about, right? That Britain is at an inflection point. We did a whole piece last week with a whole series of business.
Lots of breaks of structure.
Head of the British Chamber, kind of loads of people saying effectively this.
Tap for liquidity, just that. Okay, I'm just waiting for that change of character now.
That is traditionally what it is called. It does feel,
it's not looking too bad.
A very difficult moment where growth is sluggish and we have all of these issues with high inflation and so on. For others, actually, it's a chance to map out the next decade. But where is that policy coming from in terms of that thinking of how we reach
I like it. I like it.
And
We'll play it to 1.3. Bit of a crazy move.
I do not like to talk about politics because it gets very tribal and it gets very difficult and very aggressive very quickly. So I view this country as a publicly traded company, a PLC, and therefore you don't have a Prime Minister, you have a CEO. You don't have a Chancellor, you have a CFO. And I think we need to have, with the management team of the PLC, we need to have a growth plan which unlocks. We're the sixth largest economy in the world. We have a very commercial and wonderful citizens, and we need to unlock their value. And part of that is that we need to make Brexit work. We need to so for example, we need to review our corporate tax rates. We need to review our personal tax rates. We need to review productivity. I mean, productivity in the face of a financial
I'm going to take it.
Pandemic, in face of a war. Productivity hates those three things.
See whether we can get up and above some supply that we need to get through as well.
Is you have access to regional finance, and you do the levelling up. So we need this plan in order to what I call engage and jumpstart the economy.
Yes, and this is something that, again, we're coalescing around similar things. I understand the kind of non-partisan issue, but Make UK, the Manufacturing Association, again, wants a Royal Commission on this issue to try to get a comprehensive strategy. The issue is that we don't have that in place now. How do you get
in terms of gold, waiting on structure, mate. I'm getting a little bit of a rebound, which isn't actually too bad. So it might be able to get in on long.
Therefore, this country has to
but we need to stop breaking.
And we're going to need to take some risk. And this country has a problem when you start taking risk. But you need to take risk.
It needs to get up and above some liquidity here. Come back down, test, and then we can get. But we're waiting for that change of character. So not quite ready.
So then, which of the various ideas that have been floated around trying to get the pensions industry to invest more in UK PLC, i.e. listed businesses, or even non-listed businesses in the UK, do you sign up to?
I mean, I think that's going right into the weeds of this. You know, I think here, so as a CEO of a financial services business, you know, what I think about, I'm thinking about big picture. So I don't really want to go into the minutiae of this, even though I am dodging your question.
Yes.
But I don't really want to go into the minutiae of this. I think, so, you know, big picture, my message is economics 101, grow your revenue, reduce your tax base. I mean, take a look at Ireland. Ireland has a very interesting model. And that's and if you look at their GDP, and if you look at, you know, when Apple moved there, it moved up, what, 15%? They have a tax rate of 15%. These are we have interesting models out there to review and to discuss, and this needs to be well thought out. And I'm afraid we won't be able to completely lay it out here on your program today.
No, absolutely. But I think it is very much of the moment. My question is whether anybody is listening to that, because business is saying the sorts of things that you're saying very loudly, very clearly. Is that being absorbed by policymakers?
I hope so.
Is it how, mate?
Now is an absolutely crucial time.
Okay, yeah. Just gotta stay patient now. See whether some of these trades can develop. Keep an eye on gold.
Okay. Charles White Thompson, thank you so much for being with us. Really
Might be able to get in on a nice rebound.
With us. Yeah, I think unexpectedly forthright opinions.
Oil's holding nicely. We'll see whether we can get to the very top of that liquidity area and range. That's where we're going to be targeting. Right. Right up there. That's where you got your 4 hour supply. And that's where we're looking at prices taking off and ending up to, which would be a very nice move. Be even a larger move than yesterday.
And this is the big challenge for business leaders now, because everything is moving so quickly. We do this survey every year, 3,000 executives around the world. We ask them what's top of mind for them. One of the interesting statistics that came out this time round from those interviews, 95% of all 3,000 respondents felt that they had to fundamentally change their business model in the next 3 years. 75% of them felt they weren't making swift enough progress in doing it. So to give you a sense of the velocity of change that's going on, which is the compounding effect of all of these different forces and pressures, is overwhelming to CEOs.
Yeah. You're right, Dennis. How you doing?
Another stat which you'll be interested in, I think.
By the way, guys, thank you very much for the likes on the stream. Very much appreciated. Yeah, we're back on top of the streams now, so you can be seeing us a little bit more.
I'm going to play devil's advocate, but if 95% are wondering about their business model and the fact that they need to radically
we need to get up and above that.
Well, some of them won't, but some of them will thrive. What our work in this area has also demonstrated is that there are winners and losers at times of profound disruption, and the winners use those disruptions to capitalize on the opportunities that those disruptions present. And so we talk a lot about
nice.
Look at connectivity, for instance. The connectivity that's facilitated by the 3 billion or so smartphones and tablets around the world allows
came down, tested. Let's see whether we can get that break. Be good.
Organizations. And so it's an example of how using new technologies companies can pivot and actually thrive on the back of these disruptions. But sure, there'll be winners and there'll be losers.
Disruption used to be a good disruptor, but then married with this,
yeah, it would be very nice if we could get prices come down to that demand area just there, just come down, test full liquidity, and then really bounce.
I don't think so, David. I mean, I think it's a general condition for CEOs.
Or get close to it. Just get that little bit of reaction, nice demand. Continue pushing that up.
Why is that? Well, the core responsibilities of revenue growth and earnings growth, dividends to shareholders.
We'll have probability on our side if so, but at the moment it's a little bit of an awkward area. Got supply just here.
And to comment on important issues of the day, you know, whether it's social justice issues,
little bit of a slow morning.
If you're in the US, or whether it's voting changes. CEOs are expected to have a voice on the things that are relevant, not just to their companies, but to their customers, to their employees, to their other stakeholders. And so it's overwhelming for executives.
That was Alex Partners CEO Simon Freakley speaking to Bloomberg's David Merritt and Francine Aqua on this week's In the City podcast. You can find that full conversation on In the City on Apple, Spotify, or wherever you get your podcasts. New episodes every Thursday as well. So coming up in the next hour of Bloomberg Daybreak here, I'll be joined by Tom McKenzie. We will be looking ahead, of course, to the Bank of England's decision at midday today. 25 basis points widely expected, although a 40% chance of a 50 basis point increase. Our UK correspondent Lizzie Burden will be talking us through the details of what to expect from the Bank of England after yesterday's particularly hot inflation print for the month of May. We'll also be bringing you more of our exclusive interview with the CEO of Deutsche Bank. Christian Saving has been speaking to Guy Johnson about the prospects for the bank and the global economy given the pressures that the sector has been facing. Stay with us for all of that as we see European shares firmly in the red in the second hour of trading. Stock 600 down 1.2%. This is Bloomberg.
This is Tom Keene.
And I'm Lisa Abramowitz. Join us later this morning for Bloomberg Surveillance.
I'm Maria Tadeo in London in conversation with Ukraine Prime Minister Denis Shmyhal.
And on the Fed fallout for stocks, we speak with Sam Stovall of CFRA.
Bloomberg Surveillance starting at 7 a.m. on Bloomberg 1130, Bloomberg Television, and the Bloomberg Business app.
Or listen on demand on Apple, Spotify, Bloomberg.com, or wherever you get your podcasts.
Broadcasting 24 hours a day at Bloomberg.com. And the
Yeah, you're going to get some nice movement on on some of these alts. Do bear in mind that obviously Litecoin's halving is in a couple of months. It's in August. So this is one to keep your eye on, especially if the market is bullish. This is really going to move. I mean, it's already done a huge move. Tapping for supply at the moment. But yeah, this is definitely one that you want to keep on your radar for sure. For sure. Got oil moving.
On BAB Digital Radio London, Bloomberg 1130 New York, Bloomberg 99.1 Washington DC.
Yeah, yesterday was a really nice move. We literally caught it down here as well, just on that breakout. Very similar kind of structure. Got that breaker structure here, so it's looking good. It's looking good.
Good morning from London. I'm Stephen Carroll.
And I'm Tom McKenzie. You're listening to Daybreak Europe live on London DAB.
Let's start with breaking news from Norway's central bank raising interest rates more than had been expected to 3.75% and indicating that the rates are likely to be raised further in August as well. So we are seeing a larger than expected rate hike from the Norwegian central bank. We had already a central bank decision this morning from...
But yeah, those that are just joining us, feel free to message us in the chat section ETA that you want us to go over. More than happy to touch base on it. As mentioned, we've taken 3 positions this morning. All longs. Long on oil, long on pound dollar, long on Canadian dollar, Swiss franc. So, I mean, let's see. A couple of them are tweeting around break even. We've got this one a little bit below. Let's see whether we can get that move and break out of that compression. Supply isn't too far off, so let's see if we can get that continuation. Nice volume coming in this morning, so see if we can get that move into that area. That would be lovely.
Flat on cable now, 127.74. The euro, meanwhile, is a 1/10 of 1% stronger against the dollar at 109.95. Tom,
let's see if that changes with the BOE. It is expected, of course, the Bank of England to raise interest rates by 25 basis points today in what will be its 13th increase in a row. 13th increase, with inflation, of course, remaining at a stubbornly high 8.7%. Well, traders are betting the Bank of England will have to accelerate the pace of hikes again. A 25 basis point hike would bring the bank's base rate to 4.75%. SocGen's global chief economist Klaus Bauer says markets are wrong to expect a 6% terminal rate.
That's just insane.
I mean, we're not quite in the camp of
Fed is 6%. Currently we're at 450. We've got another 2 rate hikes by the Bank of England, getting us to 5%.
Klaus Sparta's comments come as Bloomberg Economics forecasts that 6% would knock about 2% off UK GDP. The BOE's decision will be announced at 12 p.m. London time. We'll have live coverage across Bloomberg Radio, TV and on the terminal.
The jump in rate bets has fueled a renewed rise in UK mortgage rates to above 6%. The rising cost of borrowing will ramp up the pressure on the 1.3 million households due to refinance fixed-rate loans this year. The Prime Minister...
Consumer duty that will protect borrowers, for example, by allowing them to extend their mortgage terms or switch to interest-only mortgages. And we have spent...
Sorry, I don't know what you mean. Bullish, yeah. I mean, markets depends what you're looking at.
Energy bill support have led voters to expect government intervention on mortgages.
Now, Federal Reserve Chief Jerome Powell has signalled that the central bank will raise rates twice more this year. Here's what he told the US House Financial Services Committee yesterday.
Almost every single of the 16 of the 18 participants on the FOMC wrote down that they do believe it'll be appropriate to raise rates, and a big majority believes raise rates twice this year. And I think that's a pretty good guess at what will happen if the economy performs about as expected.
Powell also told lawmakers that the Fed is running down its balance sheet at a pace of about $1 trillion a year. His comments come after the Federal Reserve paused its series of interest rate hikes last week for the first time in 15 years.
A former Goldman Sachs banker has been found guilty of passing inside information to a once close friend. Rajesh Goyal was convicted in Manhattan on Wednesday of tipping off the former Barclays trader Akshay Niranjan about deals.
TP £1 out of resistance was target price. So pound US dollar target 1.3. But I mean, obviously we'll manage it and see how things kind of react. We're looking at it breaking structure just here. Okay, so you can have your TP just here or take some profit here and then see how things kind of play out. We're looking at a move towards that larger supply area higher up. Very nice positive structure. Okay, again, you do need to be careful with obviously the BOE interest rate hike, but we're looking at it pushing up to that 4-hour supply area. Okay, that's where we're kind of expecting the end goal to be. Okay, but we'll see whether we can get the breaker structure first. If so, fantastic. We can continue pushing up higher. But yeah, 1.3 just beneath that area, right? So we'll just capitalize on it. Okay, if it pushes up, pushes up. Oil nicely moving. Let's see whether we can get this breaker structure here or point of structure. I have 1.283 as next big level. Yeah, so roughly around that area, man. Yeah, so you've got it literally just above here. It's not. I mean, it's a lower time frame area. It's not anything major, but that's your point of structure, right? If we can break up and above that, fantastic. But the end goal is that 4-hour supply area. That's where the liquidity is being held. Okay, so that's kind of the target that we'll be chasing. But we'll see how things kind of play out. That's kind of the final TP. So I mean, by all means, if prices push up, start holding or just breach, you can cash out, come back down, tap for lower time frame liquidity demand, and then we can just get back in and actually take that move right to the top. I mean, it's a pretty large move to 1.3, but that's kind of the end goal, right? Obviously, we're going to be on the screens all day, so we'll just manage it as price develops.
That includes advanced equipment and underwater robots from the US, Canada, and France. Five-man crew of the missing mini sub are currently thought to have fewer than 10 hours of air remaining.
So those are some of our top stories on the programme this morning. Tom, it is 8 minutes past 9 in London. How hungry are you on a scale of 1 to hungry?
I think you're pointing in the direction of the Bloomberg breakfast window.
Oh, you're there ahead of me. I'm
9, by the way, on the hunger scale.
Very
I've been
good.
on air for 2 hours. I'm starving. Did you bring me porridge down?
Amazing. Yeah. As mentioned, today's and tomorrow's both live streams. So your London opening session and your New York opening session will be made public, so you guys will be able to view it. But yeah, we won't be going public for on Trading View for the New York session.
It's still significantly more expensive than it was last year, but we're seeing the prices of things like tea, tomatoes, even eggs falling. In fact, the only ingredient price that grew month on month was the price of
GU moving, WTI up, yes indeed. See what we can get. This is still a little bit dangerous just because we got these areas of supply here. Okay, so could be the case we come back down. There's your nicer liquidity. I mean, we kind of came close to it here, but it could still come down, tap for a little bit more. Playing it nice and patiently.
Yes, indeed. I think that this is something that is also interesting to monitor.
But we're looking good. We are looking good.
The accusations of greedflation that's been levelled against them by politicians in particular, and this idea that, you know, some supermarkets have been announcing the cuts on prices of essential goods, mostly food items, it has to be said, and putting costs on that. Marks and Spencer's being one example, saying that, you know, they've 70 items they've cut products on. Morrison's saying they've had 6 rounds of price cuts this year. They're responding to that pressure from retailers, but the Tesco CEO Ken Murphy warning last week that grocery prices are unlikely to return to levels they were before Russia's invasion of Ukraine. So inflation is something very much here to stay in that picture as well. Let's turn to some of the, of course, the Bank of England very much focused for us today, but let's turn to some of the other rate decisions that we've had, given that the latest numbers we've had have been out of the Norwegian Central Bank this morning. So they were an unexpectedly large hike. We've also had a hike from the SMB as well. Our market supporter Valerie Tartel is with us this morning. Valerie, what have we learned from the central bank decisions we've had so far today?
Hey, we got a surprise from the Norges Bank. They hiked jumbo 50 basis points, and they also increased where they see the peak rate. They increased it by over 50 basis points as well. They think rates are going to climb to 4.2% by the first quarter of next year. The rates are currently at 3 3/4. So that implies probably 2 more 25 basis point hikes from the Norges Bank. They did increase their guidance when it comes to the next rate meeting, saying they'll most likely raise rates again when they convene in August. So 50 basis point surprise from the Norges Bank. If we look 30 minutes ago, we got a decision from the Swiss National Bank. They kept to the economist's tune, only raising rates 25 basis points, but it was finally balanced in the market. They did also revise down their inflation forecast, and were a bit more pessimistic on growth. They revised down their growth forecast as well. The Swiss franc was moving weaker after this decision. This is the smallest increase we've seen from the SNB so far in their rate hiking cycle. But
Slowly but surely.
so they've been keeping up with the jumbo pace up until today. But in the currency markets, both currencies are weakening. We're seeing the Swiss franc weaker, and then if we look at the NOK, the Euro NOK has moved lower by 1.3%. So the NOK has strengthened versus the euro on that surprise 50 basis point decision from Norway.
What's the narrative ahead of the BOE?
This was nice tap.
In June for a surprise there. Markets are finally balanced, but really, if you speak to market commentators today,
Got some more just here if it does decide to come down. There's a lot of supply beneath. At the moment we're holding that nice positive structure, so we should see a nice move.
There could be somewhat risk of
Nice. Things are looking good.
Exactly. That would cause a very painful market reaction, because look, he could maybe sound less hawkish, so you'd expect rates to rally, but actually you get this opposite reaction, and maybe gilt yields explode higher.
Over in the US, we'll get more on the BOE with Lizzie Burton shortly. But on the Fed, the market sold off, but he didn't really say anything unsurprised. It kind of stuck to the script. Yeah, yes, we paused, but the door is still open. He reiterated the dot plot. We knew about the dot plots, 5.6%. He kept the door open to another 2 rate hikes, but the market sold off.
Yeah, it was funny. If you looked at what happened to the Treasury markets, though, they didn't really budge that much. So he didn't give us anything new, except for telling us he is a Grateful Dead fan, which was very happily confirmed. that image was in fact him at the Grateful Dead concert in DC. But yeah, he very much repeated what he told us last week at the FOMC decision, and even the opening statement was very much a copy-paste of the opening statement for the FOMC decision last week. So not a lot new there. The markets, Treasuries didn't react too much. Equities were already soft on the day, and I guess just kind of snowballed weaker. The Nasdaq did close in quite a weak territory, now down for 3 sessions in a row. But it was really hard to tie that to anything specifically hawkish or anything specifically new that Powell gave us in his testimony.
Okay, Valerie Teitel, our markets reporter, thank you so much for joining us with the latest on that. We've also got our UK correspondent Lizzie Burden with us as well, who is of course keeping the close eye on the Bank of England today as well. Lizzie, we were this time yesterday trying to process that hotter than expected inflation print, 8.7, a headline number, an increase in core inflation as well. How much will that have changed the game for the Bank of England today?
Well, markets have been processing it, and they now see a 40% chance of a half-point hike today. Economists still think it'll be 25 basis points because they reckon there's more chance of a jumbo hike in August when there's a press conference, so the governor can explain why they're going back to acting forcefully when they haven't done it since February. Also, by then, Megan Green, who's been making hawkish noises, will have replaced Silvana Tenreiro, the big dove on the committee. Today, though, some economists reckon you'll get a 3-way split. So you could have doves like Silvana Tenreiro and Swati Dhingra saying we need to wait for the past 12 hikes to take effect on the economy. Hawks at the other end like Catherine Mann and Jonathan Haskell saying we need to get a grip of this now and go for 50, and the rest in the middle.
Looking good.
My sense is that the bank is going to try to communicate the future path for rates through the vote split itself.
You're going to be passing the statement. Well, there's not going to be a press conference. We're not expecting to hear from Andrew Bailey, the Bank of England governor, but the statement is where a lot of focus will be.
Yeah, you might hear from him in one interview this afternoon, but really, as you kind of imply, it's the future path for rates that's really important, and the communication, whatever they can give us around it. So markets currently pricing a peak rate fully of 6%. Some traders seeing 6.25% by the end of the year. Bloomberg Economics reckons if you get to 6, that will trigger a recession. And in fact, we've heard from the Foreign Secretary James Cleverly this morning rejecting the idea that a recession is necessary to control inflation. Will the governor push back against market expectations? It's not something that officials usually like to do. They usually like the market to respond to the bank, not vice versa. But they did in November. Can they do it? Do they do it again now? Does the market take the signal? As Valerie rightly says, it then becomes a question of credibility.
Lizzie, this is also something that's playing out not only here in the city but in Westminster as well, because a lot of unhappy politicians with the idea of mortgage rates going up even higher. How is that dynamic playing out?
Yeah, and of course Rishi Sunak's made it his number 1 priority to halve inflation by the end of the year, and as we always say, it was a risky move given that it's the bank's mandate to control inflation. As you say, it's difficult. The pain translates to real Brits through mortgages, and his backbenchers fear that there'll be
ideally if we can get up and above this area he has 1.28,
mortgage borrowers who are at risk of repossession.
get that little bit of break,
Has suggested a windfall tax on banks,
be looking good.
in that targeted support from mortgage holders. One Conservative MP's told Bloomberg that that's actually gaining political traction. But the Chancellor, and we spoke to the ex-Chequer Secretary to the Treasury, Gareth Davis, on the Bloomberg UK Politics podcast yesterday. They have reiterated this idea that the bank, whatever they do, they don't want to counter what the Bank of England's doing. Because
Those are just joining us, welcome by the way. As always, just feel free to talk to us through the chat section. More than happy to go over some TA with you. Any TA, more than happy.
Bloomberg Radio, on demand and in your podcast feed.
On the latest Sound On podcast,
podcast, we talk with Republican Congressman Dusty Johnson of South Dakota on conservative Republican objections to the debt ceiling deal.
Would I have loved a better deal? Of course. Do I think we cut enough in that? No. But it seems to me that their argument, by and large, is that it was not a perfect deal. Well, guilty as charged. I mean, have any of you ever lived in the real world? I mean, when you cut a deal, Republicans have barely 1/2 of control of 1/3 of government. I mean, what kind of deal did they think we were going to get here? I mean, wake up and smell the coffee. The reality is, it is not a perfect deal. It's only the best debt ceiling deal that Republicans have ever gotten, ever. The largest ever cut in federal spending of more than $2 trillion. The largest ever rescission of federal government spending from a federal agency. The biggest change to American siting and permitting that you and I were just talking about in decades. And the biggest change to welfare reform since 1996. I mean, I get it, gang. You wanted more. Go ahead and yell that loud. Make it seem like, you could have delivered a better product. But if it was so easy to negotiate a perfect debt ceiling deal, then why didn't we do it in the last administration? There were times we had a Republican House, a Republican Senate, and a Republican White House. We still didn't get as good a deal as we got last month. I think the complaints are overblown.
Listen to you. So is this the conversation in the halls of the House? Or are you telling those members what you just told me?
Oh, of course. I mean, I'm not, listen, I'm a polite guy, but I'm no shrinking violet. I mean, I know these guys. I like these guys. We work together every day. I'm not saying anything to you I haven't said to them. But frankly, we've moved past it.
Hear the full conversation on the latest edition of the Bloomberg Sound On podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
I'm Emily Chang.
Hello and welcome to The Risk Opportunity, a series brought to you by Bloomberg Media Studios.
So in terms of timing, so London Open roughly between can be anywhere between 7:30 to 8:30 really. Sometimes a little bit later. Again, if you're with us, obviously we'll tell you just before we go live. But roughly that's around the time that we go live. Now, that's the London sessions are always public, so you'll always be able to tune into the London sessions. The New York sessions are normally private. Okay, so again, unless you're with us, you won't get access to it. But that session is between 12 and 1:30, really. But yeah, twice a day. You'll see us on here. But yeah, London sessions public, so you'll be able to tune in if you're in the UK or anywhere around the same time.
What is dedication? My daughter is biological and my son is adopted. I love them both so much. From the morning when you wake up to putting them to bed at night and every moment in between. I think the parent's job is to protect our children but also prepare them for the world so they become good, kind human beings.
That's dedication. Find out more at fatherhood.gov.
No problem, bro. No problem. No problem.
And the Ad Council.
Markets, headlines, and breaking news 24 hours a day. Bloomberg.com, on Bloomberg Television, and the Bloomberg Business.
Just want some movement from this. It's not too bad. It's not too bad. Got a little bit here, which it's kind of already come down and sapped. So ideally hold that structure, and then we can stop breaking up higher. Be lovely. Lovely. How's our Canadian dollar Swiss franc doing? Okay, this is also looking pretty good.
Dropping 71 points to 7,487. The other major indexes that are really shedding any gains that we've seen in the last few weeks. FTSE 1.3%, trading at 27,258.
See if we can get that break.
That index off by 115 points. The IBEX futures in the US also pointing lower. The S&P E-mini is down 0.2%. The tech-heavy
Slowly but surely, guys. Slowly but surely.
The Federal Reserve Chair is expected to give further testimony to Congress later today. His comments yesterday, opening the door, keeping the door open to future additional hikes, led to a sell-off in the
GU, WTI, CAD, CHO, spot on. Yeah, hopefully, mate. Hopefully, we won't speak too soon. But yeah, fingers crossed. Fingers crossed. This week has been on fire. Yeah, it's just been a great week. I mean, the last few weeks have just been really good, especially in the commodities area. Lots and lots and lots of movement, lots of volume. Very nice to trade. Yeah.
The crypto markets are in focus and have been for the last couple of days. Bitcoin getting back above.
Yeah, we gotta let gold do a little bit more warming up, and then we can go for it. But we need that building of structure on the 15 minute, which we're not getting. It failed to break through here, so I wouldn't be surprised if we go a little bit deeper. You could even come all the way back down here, hold, and then actually build some structure. But yeah, it failed to break through here, right? So ideally we would have wanted down, push up, and then hold, and then that's your change of character, and then we could have got in. But yeah, still seeing some of that supply, still seeing some selling involved. So stay patient. We stay patient. Stay patient.
I think we see that the answer we have given is actually showing that we fared quite well.
I like this. I like this.
Remains complex.
Can't see a chest flying. Ooh. It's moving, it's moving. If we can get that break, that would be lovely.
And I also do believe, Guy, that
would be lovely.
Stay a little bit longer elevated than potentially a lot of people.
Again, as mentioned, if it does come down, tap us out, that's fine. We'll look for a tap of this 15-minute demand area from here, and then we can go in with full margin. At the moment, we've gone in with half margin on this just because it is a little bit aggressive. But again, if we get that tapped out, we'll go full margin here. Stop loss just nice below, nice and tight, and then we can get a nicer trade. But let's see. There's a nice, very nice reaction here from buyers. So it's nice on the 15-minute. Came down, tapped. So let's see whether we can get that break.
Gave a few days back was just a blip. He was talking about fixed income being down 15 to 20%. You talk about the fact that the second half is going to see significant for fixed income. So therefore, with the Q2 guidance,
yeah, it looks like these are going to materialise between probably closer towards the New York session, really. Obviously, we've got your Bank of England's interest rate decision coming out at 12 o'clock UK time, pretty sure. Let me just double check for you guys. Thursday. Well, we got it.
We see the momentum. We see a Q2, to be honest, Q2 2023 from a revenue point of view, which is higher than Q2 2022. So overall, I would say this bank is faring well. The strategy is
12 o'clock.
With regard to we always said that
we do get some US data as well. So we got continuous jobless claims, initial jobless claims.
in Q1 and Q2 we have done well, but the overall market is a bit weaker than in the record year of 2020.
That's about it, really.
But I do believe with
We get some stuff later on. Fed's balance sheet. Could be a little bit of volatility on that dollar. Let's just come straight back down.
There is momentum in the business on the fixed side, but for us as a strategy of Deutsche Bank, it is important important that we further balance out the investment bank overall. We have a very strong FIC business, we have a very strong DCM business. What we really want to achieve is that also the O&A business is further strengthened, and hence we have put a lot of investments into that.
So just to wrap this part of the conversation up, it's going to be an operating environment for the FIC business that is likely to be less good than last year. Q2 may or may not be a blip. You still see uncertainty in the second half of the year, which could provide.
It's coming down for liquidity. 2.5 hours more, yeah.
That's what I would say for the coming months and weeks. Again, Q2 was also a particular quarter, given the situation also we had in the US. We can already see also now in June.
We're going to get tapped out. That's the question.
There is momentum in the business, so I'm overall actually quite comfortable also with the FIC business. And again, Q2 was a particular quarter. I would say that the FIC business in Q3 and Q4, I think there was a slight recovery.
That was Deutsche Bank's CEO Christian Sewing there, speaking exclusively to Bloomberg's.
Would have wanted it to stay above that area, really. There's nice liquidity down here, so we'll see how it reacts.
Best interviews in one place that's available on Apple, Spotify, or wherever you listen. But given the fact that, only very recently, only last week, in fact, Deutsche Bank had been warning of a 15 to 20% drop in trading revenue for the current quarter. This idea that there's momentum being seen in trading by Deutsche Bank's CEO now, and they're expecting an improvement in the second half of the year. Very interesting to watch that. Of course, on a day we're very focused on central bank decisions, we've had the SNB hiking by 25 basis points, the Norges Bank in Norway hiking by 50, and of course we're looking ahead to the decisions from the Bank of England and from Turkey coming up later today as well. We'll have a check on the markets for you next.
This is Bloomberg Daybreak Europe.
Europe becomes the first major economy to set out a strategy on economic security.
Rises in interest rates do bring down inflation over time. That will happen here.
We have worked to bring back that stability to the UK economy, which people rely on.
I think rates will certainly go higher from where they are. How much higher they have to go is open.
Bloomberg Daybreak Europe on Bloomberg Radio.
Hold on.
9:30 in London. Good morning. I'm Stephen Carroll.
And I'm Tom McKenzie. You are listening to Bloomberg Daybreak Europe here on Bloomberg Radio London, DAB.
We are an hour and a half into the trading session here in Europe. The Stock 600 down by 0.9%. The FTSE 100 is also 0.9 lower. The CAC 40 in Paris down by 1.25%. The DAX in Frankfurt.
It looks like it's going to hold.
So hawkish central banks weighing on equity markets that we're seeing today. I just mentioned the two decisions we've had already this morning from the SNB and from the Norges Bank as well, both of which raising rates. Norges Bank more than had been expected there in Norway. We're looking ahead to that Bank of England decision later on, so the pound ahead of that. Trading flat on cable, 127.73. UK borrowing costs starting to tick up again, in line with what we're seeing across the European bond space actually. So the 2-year gilt yield a basis point higher now, 5.05%. Holding on to that big jump we had in yields yesterday, where the 2-year yield was up about 10 basis points yesterday. So the 10-year gilt yield up a basis point and a half at 4.42%. We're seeing mostly a similar move in ticking up of yields across the European space too. The 10-year bunches, for example, a basis point higher.
Getting a little bit of red now.
Bitcoin, one of the other factors that we are watching today on markets, up 0.3% this morning, still holding over $30,000 a token, though $30,077 in fact.
Okay, let's get you up to speed with the latest top stories of the day then. Of course, the focus on the Bank of England, and it is expected, the BOE, to raise interest rates by 25 basis points today in what will be its 13th increase in a row.
Alright, we've got to close out.
Stubborn high of 8.7%. Well, traders are betting the Bank of England will have to accelerate the pace of hikes again. A 25 basis point hike would bring the bank's base rate to 4.75%. Our UK correspondent Lizzie Burton says markets will be watching today's decision.
Alright, close out this oil trade.
Today is really whether the government is going to push back against market expectations. It's not something that officials.
We're going to look for entry lower down.
But they do make exceptions sometimes, like we saw in November. Will they do it again today? What if the market ignores them? It then becomes a question of credibility.
The BOE's decision will be announced at 12 p.m. London time. We're going to have live coverage, including, of course, with Lizzie Burton across Bloomberg Radio, TV and
Federal Reserve Chief Jerome Powell has signaled that the central bank will raise rates twice more this year. Here's what he told the U.S. House Financial Services Committee.
Down here.
The process of
is where we'll be looking.
back down to 2% has a long way to go. Nearly all FOMC participants expect it will be appropriate to raise interest rates somewhat further by the end of the year.
Powell also told lawmakers that the Fed is running down its balance sheet at a pace of about $1 trillion a year. His comments come after the central bank paused its series of interest rate
Yeah, this still looks okay.
in 15 months.
Now, Goldman Sachs Bank has been found guilty of passing inside information to a once close friend. Brijesh Goel was convicted in Manhattan on Wednesday of tipping off former Barclays trader Akshay Niranjan about deals at Goldman. Niranjan made
Yeah, he closed out. Yeah, it's unfortunate, but we'll go again down here to see if he come down, tap for liquidity down there. Be a nice area, and we can go back up.
Poised to remain the top seller of electric vehicles in the US through at least 2026. The story from Bloomberg's Charlie Pellet.
It happens, it happens, it happens.
John Murphy and his annual Car Wars report. He says Tesla is benefiting from renewed sales momentum sparked by a recent
What's happening with gold? If we get anything on gold.
15% of the domestic EV market in 2026. That will leave GM and Ford to fight for second
Gold's
place,
lower.
about 14% each, followed by Stellantis at 8%. In New York, Charlie Pellet, Bloomberg Daybreak Europe.
Yeah, we still look good.
The international teams searching for a submersible missing near the wreck of the Titanic. They are zeroing in on an unidentified, or at least unidentified noises that have been detected underwater. The chairman and co-founder of Horizon Maritime Services, Sean Leet, says they are doing everything they can to facilitate a rescue.
Late last night, the Arctic crew loaded a U.S. ROV, which thanks to the U.S. military, arrived by air to St. John's Airport late yesterday. The vessel departed the port of St. John's at 5 a.m. this morning and will arrive at the Titanic site tomorrow morning. We are very aware of the time sensitivity around this mission.
Horizon Maritime Services are part of an international rescue effort that includes advanced equipment and underwater robots from the US, Canada and France. Plenty more coming up. This is Bloomberg.
Hey guys, it's me as a... Hello and welcome to The Risk Opportunity, a series brought to you by Bloomberg Media Studios and Zurich Insurance Group. Countries around the world are committed to the Paris Agreement, which aims to limit global warming to 2 degrees Celsius or less. But our survival doesn't just depend on reducing emissions. In this episode, we'll hear from experts like Dr. David Lallement, who's worked to develop models to better understand and reduce disaster risk. You can listen to and follow The Risk Opportunity wherever you get your podcasts now.
Bella Gomez filling in for Smokey Bear because he's got more to say than just...
Only you can prevent wildfires.
Like, if you're outside enjoying a barbecue, don't let a hamburger distract you from fire safety. Make sure you aren't dumping your hot coals or ashes onto the ground because that could start a wildfire. So take wildfire prevention seriously and let's save the world one day at a time. Juntos con Smokey Bear, podemos hacerlo. Go to smokeybear.com to learn more about wildfire prevention.
Brought to you by the U.S. Forest Service. Visit forest.
Yeah, we're still looking good on GU. Okay, even if it comes down here and we start seeing some nice price action, still looks good. So as long as we can hold this structure ideally, yeah, we'll be in the good. Yep. Ideally, we just want to get up and above this area here. Be very good. Just round here.
Few knew about her superpowers. In a matter of seconds, she turned herself into a great mathematician. She masqueraded as a regular person at work.
But yeah, it's unfortunate here. Just ran out of liquidity. But I mean, as you can see, we're holding nice structure. Ideally, just come down, tap, and then we can get another long from that area. So around here, and we'll just play it to the very top. Be a nice trade if we can get in on that.
the business of law, the future of law, the
Almost a channel that you're kind of moving within.
more at BloombergLaw.com.
But yeah, that's the end goal right up here. At the moment, we've not really tapped anything. We broke through structure, ran out of liquidity, moved back down. So yeah, there's there's a 15-minute demand zone just here. So we'll see whether we can get down into it and then push straight back up. I'm not going to take a short. I'm just interested in the long, because that is where my end goal is going to be, right? So we'll see.
GOAT acronym stands for greatest of all time, as in spaghetti sandwiches for dinner. They're my fave. Dad, you're the GOAT.
You don't have to speak teen.
This is looking pretty sweet.
Teens in foster care would love you just the same. Visit adoptuskids.org. Brought to you by the U.S. Department of Health and Human Services, Adopt U.S. Kids, and the Ad Council.
Meet Sam.
Again, I mean, it is Thursday, so I'm not expecting crazy volume. There's a lot of volume that came in this week. So yeah, it's going to be a relatively slow session. Hopefully it picks up a little bit after 12 o'clock and get a little bit more movement.
At PPAC Private, we know that dreams can lead to great achievements. And that path, from dream to reality, takes planning, hard work, and determination.
We shall see, guys, we shall see.
Client success. We're dedicated to providing the guidance that helps them achieve it, generation after generation. While others dream, PPAC clients
Slowly but surely.
planning, investment management, and trust.
Don't know why that's not loading up. New Zealand dollar, US dollar. Okay. Not looking too bad.
If you're even considering getting your high school diploma, you can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Get the news you need to start your day in just 15 minutes.
Apparent improvement in relations between the U.S. and China.
Fed Chairman Jay Powell gives his semi-annual report to Congress.
Wake up with Bloomberg Daybreak.
That was a nice trade.
Republican presidential candidates is expanded.
Shohei Ohtani, 2 home runs, available now on your podcast.
Weekday morning at 6 a.m. Eastern.
Either the market doesn't believe the Fed or they don't care.
Subscribe to Bloomberg Daybreak U.S. Edition today on Apple, Spotify, and everywhere you get your podcasts.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg.
I get a little bit of a continuation back down.
Thursday, June the 22nd,
Too bad.
here in the city of London. European equity selling off for the 4th straight day. The benchmark is down 0.9%.
I'd be able to get in on a short.
UK, the FTSE 100 falling 68 points, trading at 7,490.
Just that would be very nice.
Losses of 1.2%. The CAC current trading at 7,174. That's a drop of 86 points. Across your sectors, the heaviest selling coming through for travel and leisure, falling 1.6%. Banks in a similar state, and autos down 1.5%. The sectors that are faring least badly.
Yeah, US dollar, Swiss franc could be a play as well.
Down between 1/10 and 0.3%. The Bank of England, of course, firmly in focus. Will they go 25 basis points or a jumbo 50 to get their hands around the inflation conundrum that the UK faces is a central question for the Bank of England, and any guidance that comes through from a statement that is released after that decision, midday UK time. The Swiss National Bank, they came through with an interest rate hike as expected of 25 basis points, and we got the Norwich Bank as well. The Jerome Powell of the Federal Reserve keeping the door open to another 2 basis points, or rate hikes, I should say, from the Federal Reserve, pointing to
Up.
forecasts from Fed officials that rates could in the US get to 5.6%. In your currency markets, the pound currently flat at 127, euro dollar at 109. Gilts, UK government debt, not a huge amount of action. We're just edging up 22 basis points. And 2 years only at 5.06. Benchmark 10-year at 4.42. In your commodities, Brent is down 0.7%. Crypto is in focus, above 30,000, holding above that 30,000 level. A little bit of optimism coming through as institutional investors like BlackRock put in requests for licensing at the SEC over in the US for Bitcoin exchanges and ETFs. Currently 9:42 in the City of London. That's a check of your markets.
Let's get some of our global news stories now. The US Federal Trade Commission has sued Amazon.com for violating consumer protection laws. The regulator is arguing the e-commerce giant duped consumers into signing up for its Prime membership service and deliberately made it hard to cancel. The suit is the third the FTC has filed against Amazon in the past month. Amazon has responded, saying the FTC's claims are false on the facts and the law. US prosecutors looking into former President Donald Trump have started sending evidence to his legal team, according to a court filing. Filing underscores the government's intent to move quickly towards trial. Trump is accused of unlawfully holding on to sensitive national security information. The documents are so sensitive the legal team are currently undergoing security clearance before they can view them. And France's Finance Minister Bruno Le Maire is calling on wealthy countries to boost their financial aid on climate change. Le Maire is speaking at a Paris Climate Change Summit aimed at overhauling the global lending architecture. The Summit for a New Global Financing Pact aims to reform how multilateral institutions support poorer countries and address threats like climate change and future pandemics. Attendees include the Chinese Premier Li Qiang, who told Macron last night he looks forward to discussing ways to expand trade. Those are some of your global news stories this morning.
All right, checking out the roundup of some of the big news stories of the moment. We have a really important interview and a really fascinating conversation with the US ambassador to the EU. That is going to be coming up. And of course, we continue to keep across these markets on a very big day once again in terms of what's happening with the central bank action. And currently, you're looking at European equities, as I mentioned, down 0.9%.
Well, let's hear more from that interview with the US ambassador to the EU, Mark Giltenstein, who's been speaking to Bloomberg's Europe correspondent, Maria Tadeo.
Well, I have the privilege of serving as US ambassador to the EU at probably the high point in the last half century on the relationship between the EU and the United States. And I think there are probably three reasons for that. One, President Biden ran for election on the platform of rebuilding this relationship and all multilateral relationships, but in particular the transatlantic relationship. Number two, it does make a difference that we have a common enemy. We have Russia threatening the very existence of the transatlantic relationship, both in NATO and the EU. And third, I think it's the statecraft that's been demonstrated by the leaders on both sides of the Atlantic, not only by President Biden, but also by Presidents von der Leyen and Michel, who have worked very closely with President Biden on the EU relationship. President Metsola deserves credit as well. And then at the next level, Joseph Borrell and Tony Blinken and myself have a very good relationship. And at the staff levels of all of these offices, we're in constant touch with each other. And I think that we're like all on the same team.
And Mr. Ambassador, that was not always the case. I remember at a point when President Trump was, of course, President of the United States, the relationship, let's be very clear, broke down at one point. There was very little communication. You say now it's working, but there's an election next year, so what's going to happen? It can go both ways.
Slowly but surely.
Win re-election.
Oh, he will win the election?
Yes, you heard it here first.
So you say don't worry, he's getting reelected?
I'm confident that he will be reelected. Regardless, we are building institutional relationships and making commitments that will hold us in good stead for the next 50 years. And I think we're also in the process of building a new security structure.
Yeah, it's going to come down on top for liquidity as well.
Years ago. And it's being driven by events. And I think on both sides of the Atlantic there is an understanding and a commitment to a new revitalized relationship.
And you talk about economic security, and that takes me, of course, and you know this, to China. You talk about de-risk. The European Commission 2 days ago, von der Leyen repeated this idea of de-risk. Do you feel the Europeans have moved closer to your assessment, or actually this is a convergence of
I think
views?
the best thing to read, the best things to read about this would be probably Jake Sullivan's speech at Brookings, where he goes through, sort of a new economic strategy. I think the paper that the Commission just released on economic security, this 14-page paper, which is a starting point in the debate in the Commission and the European Union, describes de-risking very eloquently.
Which is
to recognize that secure supply chains
in terms of gold, well, ideally hold this area here. If it comes down, yeah, I mean, we're at, we're in demand, so ideally hold. There's a larger demand beneath, but yeah, we want to hold that positive structure, right, and then we want to start building. So anywhere within now, really. We don't really want to break through this low here. So anywhere above this low here is what we want to see. But obviously we failed to break out through here and change of character there. So we'll see whether we can get something here. If so, start building. But yeah, there's no ideal entry to go long in just yet. Stay patient.
A new industrial policy, and I think that's what you see happening.
And the industrial policy, you of course have the Inflation Reduction Act. The head of the Commission said she wants to create what is promoting and protecting made in Europe. You want to protect made in America. She wants to be made in Europe. How is that compatible? You don't believe there could be trade tensions again?
So there are trade tensions, but that's natural between two democratic systems, and we have to bring them to the same page. And that's primarily what I do for a living, is I try and build consensus on both sides of the Atlantic on these very issues. And as somebody asked me what my job was, and I said, it's keep bad things from happening. And one of the bad things is if we have a misunderstanding. There's no reason for a misunderstanding because our ultimate goals are the same.
That's the US Ambassador to the European Union, Mark Gittenstein there, speaking to Bloomberg's Europe correspondent, Maria Tadeo. Coming up next on Bloomberg Daybreak Europe, we'll be checking in with our colleagues in the US.
Thank you for the follows and thank you for the likes as well, guys. Very much appreciate it.
International business. The same goes for business disputes. That's why the International Center for Dispute Resolution provides a faster, more efficient approach to dispute resolution across borders. Backed by the American Arbitration Association.
Can we get a break? That is the question.
Leading provider of dispute resolution services. Find out why global expertise matters. Visit icbr.org.
A little bit of upward movement. Nothing crazy.
To Hong Kong, the Hang Seng down about 1.3% right now. 24/7 business and market news that expands your worldview.
Always nice to see you, French Finance Minister.
I'm much more concerned about how things flow out of China.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Hi, I'm Danica Patrick. Watching my nieces grow, play, and learn is amazing, but not every child gets to be carefree. 1 in 6 kids in the U.S. are hungry. This breaks my heart, and it's something that Feeding America is working to change. Each year, the Feeding America network of food banks rescues billions of pounds of good food that would have gone to waste and gives it to families in need. To help, visit feedingamerica.org.
Brought to you by Feeding America and the Ad Council.
The Bloomberg Talks podcast. Today's top interviews from around Bloomberg News.
Joining us now, Uber CEO Dara Khosrowshahi.
We're joined by the JP Morgan Chairman and CEO Jamie Dimon.
Very slow morning.
Fortune 500 a special interview with Elon Musk.
The Secretary of Commerce, Gina Raimondo.
Bloomberg Talks. Subscribe today on Apple, Spotify, and anywhere you get your podcasts.
Mm-hmm.
One knows where this market will go. Right now, it feels like a wild ride. One thing's for certain, there's a way through it. And the experience and guidance of a Merrill advisor can help you get there. Because where there's a pull, there's a way. Find an advisor at ml.com/bullish.
Merrill, a Bank of America company. What would you like the power to do?
Investing involves risk. Merrill Lynch, Pierce, Fenner & Smith Incorporated, registered broker-dealer, registered investment advisor, member SIPC, a wholly owned subsidiary of Bank of America Corp.
Your business landscape is ever-changing.
There could be a lot more selling to come.
Ours is too.
Just getting some headlines I want to bring to our audience.
We also have the unknown of how much can financial assets take.
We have something else in common.
The small caps continuing to feel the pressure.
We seek out the latest business news wherever we are.
The deep drop in Asian equities overnight.
U.S. futures also pointing to the downside.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Surveillance Podcast, on the stock market, Chris Harvey, head of equity strategy at Wells Fargo.
Tech is not going to roll over. The major thing is not going to roll over until you crack the economy. That's what happened back in '99. That's likely what's going to happen now. I don't think you crack the economy until the Fed gets more aggressive. And so we'll have some wiggles. I think we'll have a pullback in the market. We'll have a pullback in big tech. But that overall theme is still in place. And not until the economy breaks do we really think about that trend breaking.
Is tech in a set of individual companies that you study at Wells Fargo, or is it this amorphous sector blob up there like the 1950s sci-fi movie?
We do study tech, we do study individual companies, but what we do is we focus in on a lot on the Uber, what we call the Uber cap, or the top 50 names. You can look at one or two names, and that's great, but that doesn't give you a trend. We look at the Uber caps because as you go across capitalization, small cap, mid cap, large cap, they all have characteristics, and the Uber caps are the ones that really
Right, okay.
that tech exposure.
There isn't a great deal happening. Okay, so we'll end the stream here and we'll come back just before 12 o'clock because obviously we get that Bank of England interest rate decision. But again, as mentioned, it won't be on TradingView. Okay, so anyone that's watching from TradingView, just bear that in mind. You will be able to watch it, but just not on TradingView. Okay, so if that makes sense. But yeah, everyone that joined in today, thank you very much for joining. We shall see you for the next session, for that New York opening session. Hopefully these trades materialize between now and then. Yeah, just a slow morning, so obviously we're taking a few positions. We'll see how they materialize, and then hopefully we can cash in on some profits. Okay, but yeah, thank you very much. Enjoy your day. If I don't see you again, but yeah, cheers. See you soon.